What is happening? All right. So, you know, Bitcoin is looking bullish. Markets are looking bullish. And, if your money is on the sidelines and you don't know whether to buy or not or whatever's going on, you know, I feel the FOMO. I know I feel it. I want to buy something so bad because I think it's going to go up. But the world just seems like it's in a very weird place at the moment, and I'm really not confident in putting my money into a market that I'm unsure of. I just wanted to look at the Dow Jones today, um, go over some things, and give you what I'm seeing here, right? Based on some of the things I've learned. If you're watching this and you do TA, please let me know what you think. Let me know if I'm doing things wrong. Let me know if I'm doing something okay, right, or whatever. But any feedback is always helpful. But one thing that I started getting into lately is levels. And I was leveling out just periods in the Dow Jones over its entire history of, zones here. And in my interpretation of zones is anytime price stays in one point, moves to another point, and doesn't visit the previous point. All right. Now, obviously, the Dow Jones, we had the Great Depression. All right. But you did get basically 3 levels up and then a massive drop where you got another level up where you don't really visit the previous level. All right. I got this circle here. It's very interesting to me. There didn't really seem to be any real level there. You just kind of drifted into the next zone, right? Where you kind of got this back test over here of the previous high, right? That's why I got that green there and that red there. And that's why I level this as like my next zone, all right? Like a level 2, if you will, okay? Now, in my yellow box, it seems to have cycled again, right? Where you have a zone here, okay? You got another zone here, and then you got a third zone here where you corrected back into the previous zone, bounced back, kind of like a little inverse head and shoulders. I am frozen. Oh, Lord. And we are back. Perfect. Wonderful. Fantastic. All right. Right, where you kind of corrected, and that was approximately, a 46% correction. All right. Something fairly large. Okay. Where you then shifted out and moved into a brand new zone, right? Kind of like a new cycle within this cycle. All right. Where you drifted up. All right. You consolidated here 1, 2, 3 years, right? But then in this year here, you kind of transitioned into another zone. All right. I got a little confused here. All right. So any help would be helpful. All right. Whether this is all one zone up in here, all right, is something to be said. However, I think what I had done is put it on Heikin-Ashi candles and just look for different things. So let me go over here. I think I did it on like my 3-month time frame. Yeah, that was why. So right, I had two little hiccups in here. These 2 little hiccups in here kind of told me that price consolidated in this zone here, but then it just kind of drifts up for like quarter after quarter after quarter after quarter after quarter, just holding the 5 EMA on the 3-month time frame, just riding that 5 all the way up, right? And then I marked out obviously your .com and your financial crisis at the top of the final zone up here, okay? But go back to the 12-month because I want to focus on like the highest time frame possible, okay? So that brings us to our current day and age, all right? Where we've now drifted out into a new level here. Let's come over to regular candles, all right? Where you spent time drifting out, all right? Here, moving things out, all right? Once you had the financial crisis crash, right? you've transitioned into a new level, okay? And I consider this a whole new level because prices never revisited the top here in this final zone. All right, so I've shifted into a new zone. Okay, these prices don't really visit these prices. You've shifted out. Okay, in this middle zone here, and of course, like for me, it's the hardest thing for me, at least, is finding out where you are today. Okay, so in essence, you've had this little zone of consolidation here, shifted out. You've never revisited these prices here, all right, with the exception of a black swan event, whatever you feel about that. However, you got sucked back up that year, closed above the previous year, okay? And now you have 2021, 2022, all in this level up here, okay? So now you've consolidated basically for the past 3 years at the top end of this zone. And so when I'm looking at patterns, I'm going, all right, cool. I got 3 levels, right? 1, 2, and 3, each with different cycles in it, okay? This one is a little bit different than all of the rest, okay? This one clearly has 3 cycles in it. 1, 2, 3, with a gap in the chart. At least that's what I'm seeing, a gap. All right. And then I'm seeing another level up, a final level where you have, 3 levels within the final level. All right. So I'm like, okay, cool. Now in each of these levels, all right, obviously in your first one, you had the Great Depression where you had an 89% correction. All right. In this level here, in this level here, you had a 46% correction and a 54% correction before leaving this level here. Okay. Here, only in this black swan event did you have a 35% correction. For how long exactly? I mean, well, I don't even know. Let's take a quick look at that real quick. Well, how long was that correction for? I mean, 1, 2, 3, 4, 5 months before you were back to where you previously were. All right. So it wasn't anything crazy, right? This one lasted, 1, 2 years. All right. Not 5 months. All right. You had 2 years of downwards movement, of correcting. All right. Here, this is even longer. I mean, this is, for Christ's sake, 15 years. All right. And then, of course, down here, you got multiple years, 4 years of just straight down. And that was an 89% correction. That was extremely terrible. It was a Great Depression. All right. So, okay, that's what I got for zones. All right. And now I'm going to myself, all right, so in each of these zones, I have an 89% correction. I got 2 50s. And in this one up here, I only have one 35% correction. All right. Now, you got a 35% correction. You're in, they say things come in threes. All right. That's how it is, right? Things come in threes. So in my third level, I got a 35% correction. Interesting. And it's a very interesting time, too, because we printed all of that money, and we all know the story with that, okay? This isn't anything new. If you're watching this, you know about everything I'm going to be talking about, okay? All right, cool. That is price action in zones with just percent corrections. Cool. Now, we love our indicators, right? So let's take a look at our RSI. What happened to my RSI? All right, cool. So here's your Great Depression. Now, I know you're going to say, whatever with this, you've gotten dips below, all right? However, they correlate with previous, bear markets, all right? So, for example, I think I marked it out. right here. You know, you got your ketchup and your mustard, and anytime it crosses and your water falls beneath it, all right, and the line is what I've marked off. All right. Essentially, this is the TDI. I'm pretty sure those are representations of the 5 and 13 EMA, but on the RSI. All right. In essence, I call it the ketchup and the mustard. That's how I'm learning it. All right. And then your water is obviously like your flow of strength, aka like your flow of money, whatnot, what have you. Okay. And we're gonna take it from here. All right. In the 70s, where we know we had high inflation, which correlates with a top of a zone. As you can see, it's the red zone right there. All right, cool. Now you come over here. Nope, I don't want that. I want this. All right, cool. Now, your watermark falls beneath your ketchup and your mustard, falls below the line. What happened? Top of a zone. Okay, 50% correction. 46% correction. Okay. I see something happening. All right. Now, currently, just based on that, all right, and you got touches. You got your first touch, right? You got multiple touches on this line with dips below. All right, a little dip, a larger dip, right? This would be your level 2, your zone, your level 2, right? My yellow box where you got in 2 dips below. All right, and like I said, every time your watermark falls below your ketchup and your mustard, which it's currently below at the moment, right? You've had a decent correction. All right, and I tried to line it up as best as I could. So I tapped it here, all right, and I tapped it here, right? And currently, and the year is not over, of course, you are breaking that trend line on the 12-month time frame. So you've fallen below your 2 lines here, your ketchup and your mustard. You're breaking the line. So is it feasible to say that we're, you know, in the next year or two, if this closes below the line, that you could get another correction? That's just something to consider. You could easily, you know, have a huge rally, you know, close back above this line, or maybe just get a little dip or whatever. I don't effing know. All right. However, it's just something that I saw. I'm showing you. You let me know what you think. All right. Now, there's that. Now, I know people. I know Savvy talks about this as well. All right. I love watching all these guys. I love watching Savvy. I love watching, you know, Benjamin Cowan. I love watching Tino's from Traders Reality. I love watching all the, you know, all these technical analysts. Crown. You know, I like all these guys. All right. They know so much more than me than I will ever know. So if you want real good information, go watch those guys. They know a lot more and they know what they're talking about. All right. I'm just giving you what I see in the patterns and what I've learned. So I've learned zones, right? Break of RSI, crossing of lines, whatever these things mean. Because at any given time, anything can happen. Okay. For whatever reason. So, cool. We've done the RSI. We've done zones. All right. Now, also in your RSI, what do you got? You got bearish divergence here. All right. Bang, bang. From that peak to that peak. All right. So let's just take a quick look. Make sure I got this all lined up. Perfect and wonderful. All right. So, right, you got this beautiful, beautiful line that I've drawn on my RSI. All right. Downtrend of, you know, lower highs in your RSI. And from that peak here, you got higher highs in your price action. That's divergence. That is bearish divergence. On your 12-month time frame, the highest time frame that I think we even got on TradingView. All right. So you got bearish divergence. All right. Is it confirmed? I mean, I guess you confirmed it, right? You confirmed it when the candle closed in 2021. I mean, you confirmed some over here too. You confirmed it here. All right? You confirmed them all these times, right? Now you could say that, there's, part of it's played out or whatever, but you currently have made a lower high in your RSI and you're heading down. Your RSI is pointed down, period. End of story. All right? That's what's going on. All right? There's that. Cool. All right, so you got bearish divergence from 23 years ago. 23 years of bearish divergence. You got an RSI. What is RSI? Basically what it is, these guys are averaging lower closes, all right? They're averaging lower closes over time. Now, granted, you're making a higher high here, right? But what do we know? That there was money printing and all this jazz, all right? But in terms of price and strength of the asset, all right, it's averaging lower in strength here. The average of the closes are going lower than back here. So, like, what do I deduct from that? All right, cool. Well, you had a financial crisis and things went crazy, all right? And maybe, people are understanding that they're laddering out, right? They're laddering out at the top. People with money are laddering out, okay? They don't know where the top is. They sell as it goes up. They sell into strength. They sell in level 3. In level 3, they go the hardest. They sell the hardest, just like your market makers. In level 3, they go the hardest, okay? All right, so we know that they're selling on us. All right, the price is rising, but they are selling to us. That's what I'm getting from it. All right, cool. All right, cool. Now, you got my boy Crypto Face. Not my boy, really. He has no idea who I am. But I love his indicator, all right? It's a cool indicator. It's got cool colors, cool momentum waves, money flow, VWAP, what have you. It's got a lot of stuff going on in there. And in there, you can see some trends. Let's look at that, all right? So, you can see divergence not only on your RSI, but your momentum waves do create divergence, all right? So, right here, of course, you still, from this higher high that you put in, because you had a high in momentum on your 12-month, a lower high, but then you made higher highs. In fact, you've made 3 higher highs, 3, a very powerful number. However, we love to use this trading strategy. If you use Market Cipher, you use this. You use divergence and you confirm it with a red dot. All right? Where, you may have confirmed it here in 20, you got a dump. You got the pump. And now you have another red dot on your 12-month. Okay? So, if that confirms, it confirms divergence yet again, just like it confirmed over here, where, you got the dump. Did it really, did it really confirm? Or was it like a fake out, kind of? You know what I mean? Because you got sucked back up. But nonetheless, red dot, green dot, red dot. Sweet. You got the red dot. We know that when the red dot confirms, the divergence is confirmed. You got lower highs on your momentum waves. And like on your RSI, obviously they're very similar indicators. All right. But for those of you who do use Market Cipher, you know that this is bearish divergence. Where if you were in the 4-hour time frame, you would probably take the short. If you were in the 8-hour time frame and you saw bearish divergence, you would take the short. You would go short on a small time frame seeing that. That's what you would do if you were using Market Cipher. Okay? Cool. So you got that. So you got bear div on Market Cipher. All right? RSI pointing down on the 12-month. Of course, it is February. All right? So anything can happen. God knows, the aliens that have landed or whatever's going on in the world come and they're giving us tons and tons of money and we just head up. Sweet. All right. So you got that. All right. Cool. All right. Now, if you do use Market Cipher, you know that money flow is definitely a thing. All right. And since the financial crisis, where you've had, a financial crisis, you know what it is, financial crisis, money is generally running out. All right, the curve is down at the moment. All right, money is not flown in really since then. Now you might be saying, well, it kind of looks like it's coming up, right? You can make the case for that here, right? Money is coming up. However, I see a peak, right? I see the peak of the market here, and I see a downtrend. I see a reversal in money in a downtrend. All right. And if you are a big fan of divergence when you do money flow, if you do that, on any case, you see lower highs, right? And you see higher highs, right? Lower highs, higher highs. That's money flow divergence, if you will, if you do divergence that way. All right, cool. All right, which would be bearish. All right, what's the VWAP doing? VWAP is pointed down. You are in a downtrend on your VWAP from here, downtrend. All right, back in here, it looks very similar to this, right? On your 12-month, bang, bang, bang. All right, so you can look at that and go, all right, there's a trend, right? And you can look and see what the hell was going on in there, right? So you got like this VWAP here all the way down into like the bottom of the trend there. All right, and again, kind of something similar here, right? Let's see, 2005. Okay, cool. Let's do it. Bang. Where you have a nice downtrend, right? It doesn't have to be perfect, right? But in essence, you got that VWAP here. All right. Now you got something very similar going on over here. All right. You got a nice little downtrend. All right. So now what happened during these, these flows, these trends here? So you want to follow the trends. All right. So what went on? Hopefully we can see it. Yeah, it comes up pretty well. All right, cool. All right. Let's see what's going on with price. All right. So your VWAP is coming down. All right. What's going on with price? Price kind of stays level until the VWAP kind of gets like, 3 hits to the side, and then you shift out. I could see it, You started here, you're coming up, but your VWAP is coming down. All right. Your price is coming up, your VWAP is coming down. And I guess they kind of catch each other, where price is level, but VWAP is bottoming out before you can change the trend. All right, where you've changed the trend, you come to the top here, happens to be the middle of your, cycle 2. All right, where the VWAP then reverses, starts coming down. Price is rising, VWAP is coming down. All right, where you finally get a crash up here. So it seems like every time you kind of hit the bottom, right? From the bottom, you move up, right? Bottom, you move up, right? So what's going on right now? You haven't really come out. You know what I mean? Like, the trend isn't as nice as these other ones. Like, this one was nice. Very level, right? Kind of a nice fit. This one, kind of a nice fit. This one's not so much. It looks funky, kind of. Looking a little funked. Looks like it's it's more of like a sharp decline, isn't it? It's steeper than the other ones, right? Even if you put it through like the middle of the peaks, it's very steep. It's a steeper VWAP, if you will, right? It looks steeper. This is massive. Whew. Right? That was your 2008 type deal, you know, where it had built up so much and you got a nice 50% correction. All right? So there's that. All right? Cool. All right, what else do we see? We see lower highs in our VWAP, do we? Yeah, pretty much. Lower highs in our VWAP. But do we have higher lows? We also have higher lows. All right, so there's just something to note. But nonetheless, are things coming together in a sense? Maybe, right? You can kind of, if you like triangles, right? Who doesn't like triangles? I know I do, right? Kind of draw like the best fit of it. Something like this. Something to note. You know, normally in these triangles that we love to draw, towards the apex is where you get something happening, right? Now it's the idea. Where something goes down. All right, so there you go. You got a little triangle action going on. All right. So, you know, anything could happen. This thing, you know, apex is out at, you know, forever from now. All right, but in essence, you know, you want touches. You got a break of it. Some might call that a fake out, right? Kind of like this. You got a fake out here, a fake out here, right? When's the real move coming? Maybe this is going to be the real move, you know, where you finally break down and send things into the abyss. Or maybe you bounce up and we go and we all get rich. Who knows? Who the F knows? All we're doing is looking for patterns and trying to find confluences and make fun predictions that probably will never come true, you know? But that's what I'm seeing there, all right, as far as market cipher goes, right? Bearish divergence. What else was there? Oh, there was another thing here. All right, you do have some confluence here where you have, we love our trigger waves on market cipher, right? So you got a nice trigger wave here coming up. There's your higher lows, right? So in essence, you know, you would want to see this catch itself here to keep that higher low structure on your momentum. All right? In essence, that's what you would want. All right? You can see. Bang. Right there. Clear trend. There's a clear higher low trend. All right? However, 1, 2, 3 touches. I'm not saying this is going to happen. Probably hell no. We'll probably just go freaking straight up because that's what markets tend to want to do. But if it's anything like this, right, in your Great Depression, where you actually come down past the zero line, that trend would then be broken. You know? All right, something to consider. Put the fear in you. Love the fear. Okay? So, there's that. So, like, what's the worst possible case, right? I told you about this 3-month chart that had this, like, kind of looks like a freaking imbalance to me, to be honest with you. Where you just ride the 5, you know? On all these other, on all the other 3-month charts, you know, you've ridden the 13 but got dips. You know, you hit the watermark. You know, you come below the watermark. You know, on your 3-month chart here, you know, you've at least come and touched your 13 EMA on your 3-month time frame. All right. However, in this little gap right here, you never really touch it. At least not on the Heikinashis. Let's go on the other candles. Yeah. You never really touch it. It just kind of looks like you go straight up for like ever. Right? Just drifts up. You know, you had one quarter here. You know, one bad one out of all these. To me, this is an imbalance in the chart. Right? I don't know what you guys think. But to me, that's an imbalance. that normally in charts would want to get filled, right? Like, that's what it is. And what do we know about the levels? In the levels, after level 3, you normally come down somewhere in between inside of level 2. Test that level. You got the previous level 3. You got an imbalance here, right? I don't think you're coming down to here, because that right here is an 88% correction, which would fill the imbalance that you had during this period in time. 88% correction in the Dow Jones. Why not? Some people think so. I know Savvy thinks so. I know some other people don't. So you don't get that. But just based on percentages, right? You had a 48% correction over here during a period of high inflation and some craziness, all right? You had a 50% correction over here during a financial crisis. But are you telling me that we had the flu, you know what I'm talking about, an increased money supply, okay, and all we got was a measly 35% correction that got sucked back up in 5 months? Like, it doesn't add up. Why, over the 100 years of the Dow Jones, has these patterns played out, you know, where you get corrections? Maybe you don't need a freaking Great Depression, right? But at least over 40%, right? For a sustained period of time. You know, this is, how long were these? You know, this is 50 bars. Oh, that's on the 3 month. 1 year. Sorry. All right. But you get what I'm saying, right? Like, how does it, someone make it make sense? Somebody make it make sense, because it doesn't make sense as far as like, just like this goes. Because there's a lot of other things that don't make sense in the market at the moment. We're all scratching our head. 15 years of sideways action, all right? Of just going sideways. What was this one? Another 13 years. 15 years. Another 15 years. So there's 30 years out of this whole thing where price didn't do anything. It just went up and down, up and down, up and down. All right? You know, at least this was, you know, 1, 2, 3, 4, whatever. 4 years of down. That's fine. I would rather take 4 years of straight of an 89% drop than 15 years of freaking sideways, to be honest with you. That's more like it for me. Because even after that, what's the difference? You get better prices, right? And then at what point were you back to the same level? How many years? Ooh, 20 years. Fuck that. No, I'll take sideways. Right? I would rather sideways. Scratch that. However, I mean, so what do you got? You got from the top here, if a 35% correction is the normal after a period of consolidation, so you can get another 35% correction. Because right now on the Dow, what have you gotten? Really? You know? From the top to the last correction, because price hasn't come back into the zone, you've gotten a 22% correction. So this is the best market ever. All right? Cool. So you can maybe get another 22, which you got already. If you think it's over based on everything I've shown you with Market Cipher and the RSI and the money flow and what you know to be true about the money printing, and now they're doing CPI data a new way. I know Mr. Benjamin Callen was talking about doing a college experiment for, you know, X amount of years, you know, 5 years, 3 years, and you do it a certain way so that you can kind of like predict results. That's the idea. and then all of a sudden you're going to change the way that you do the experiment and then expect to be able to predict results doesn't make any sense, man. It doesn't make any sense. Ready for upbeat season. All right. Okay. That's my view on the Dow Jones. So we see our good friend Captain BTC having a beautiful rally. What do we know? We know that when Bitcoin goes up, the dollar, right, comes down. Okay? However, let's just look at the dollar from a 12-month perspective and do our zones. Because we also know that in our zones, price consolidates, shifts out, and really doesn't visit it ever again. So there is a zone of consolidation. All right. And here is a zone of consolidation. Now, this wick is very interesting from the previous year, so we're going to not count that in there, all right? We're going to count that as a zone, all right? Because essentially, in this year here, from this transitionary period, you've shifted out of the zone, all right? So we want to look on a yearly basis. However, to get a better view of things, let's just go to a monthly time frame, right? Right? Zone of consolidation, you shift out, you don't visit these prices ever again. Zone of consolidation, you shift out, and in essence, you would say you do not visit these prices again. Right? A little peek at, that's all you're going to get? That's it? Does that make sense to anyone else? To me, this looks like a nice little W rise up into another zone where you've broken into that zone and all you've done is back test the previous higher levels and are shifting out. And that monthly candle, man, that monthly candle, look at that. That looks bullish AF. Doesn't it? Doesn't this look bullish to anyone else? Doesn't this look like a reversal? Right? You got reversal volume over here for all the traders reality people. Right? This is a reversal in volume. A reversal from the previous zone. All right? I don't think you got that down here. Nope. But you do have it right there. And look at the volume. Just look at the volume, man. Look at it rising. It's going up. Right? It's gone up to solidify the move into another level. So you might go, all right, cool. So you see that pattern. So what do you think? Let's just do our percentages in this zone here. Right? Let's use it over here, shall we? You got, it's not exactly 22, but let's go from here, bang, to the actual peak. You know, about 25%, right? Increase in that zone. All right. What's going on here? In this zone, 16%. Am I on the right thing here? Is it going to change my stuff? 16, 25, 16. What have you gotten from the peak over here? All right. What did you shift up to after that? Another 10%. All right. Look, I don't freaking know, man. I don't freaking know. If you want to use Market Cipher, at least, to help you with your Dixie, that's always a good thing, too. Right? What do you got? You got some bear div on your monthly. There. Let's go to your 1 year. You don't have anything. Let's go to this one. There you go. Here's your 12-month time frame on this one right here. I stole this from Savvy, by the way. yeah, it looks like you are in a massive, massive uptrend on your yearly. And this momentum was deep and is carrying up. All right. Although your VWAP is coming down, right? You're making lower highs on your VWAP. If that matters for the Dixie, I don't know if it freaking does or not. But you don't have any money flow actually on your 12 month. So let's just go to a lower one. Let's go to the 8 month. 8 month money is flowing into the dollar. Seems like. And when was the last time that was? Money has been flowing in and out of the dollar into the dollar since 2015. So it looks here, right? Like in 2008, people got freaked out, right? They went back into the market, and then maybe some crazy shit happened, okay? And they were like, fuck this, we're leaving, right? And they went back in, and now they're like, yo, we need the dollar, man. We need it. Now, you use Market Cipher. You know that split RSIs means a weak trend. All right? That's something to note. If that matters on the Dixie, if it matters, what's your monthly doing? Your monthly on money flow, you're coming over to this one at least. All right? You haven't made a higher high since 2019 or 2016 or 2013. So in essence, you know, you got, you might say it's like a cycle here on your monthly time frame, right? Where you come in, out, you had some nice curvature, right? But what you've done is now kind of reset, and you could be coming up again for some more. All right, 2027-ish. All right, if you want to draw it out that way. All right. On your monthly, you have bearish divergence, right? But your VWAP currently made a higher low and is turned up on your monthly from back here in 2020. So that's also interesting to note. Okay. I mean, that is what we are looking at, okay? So that's everything. That's your Dixie, all right? As far as EMAs go, it seems like, you know, let's go to this one. There's more history, which means the EMA is going to be more accurate. Let's see what we got as far as EMAs go. So, you know, support here. Support here. Because remember, here are your zones. All right, this is your level 2 up in here. And let's see. It held it as support. You broke it as support, but you've broken back into another zone. You know, you almost would want to say you'd want to test your 50 EMA on your monthly to confirm a zone. But if this thing just drifts up, it'll bring your EMA, your 50 EMA up into the zone. Something to think about. Let's go to the weekly. See, now in your weekly here, yield dips below, which is totally cool. Little bottom formation and shift out over it, hold it as support. Your bottom formation, here's a little like an inverse head and shoulders on your weekly at least. You shift out above it, you now held it as support. So in essence, you know, if you do look on the weekly in each zone from the bottom, because all the dollar has done since 2008 is go up. That's all it's done. All right. I know the narrative is one way, but it's all it's done is made, right, higher lows since 2008, right? This is a deviation, isn't it? Or is that a double bottom? No, it's just made higher lows. Period. End of story. All right. So the dollar has only made higher lows since the financial crisis of 2008. For what reason, you can draw your own conclusions too. All right. And every time you're shifting out of a zone, right, you've been below your 50 EMA on your weekly. Currently below it. Trying to come back above, which would be kind of like a V-shaped play. Now, maybe you come back down, test the previous level over here, and then shift out. That would give you enough time to have a nice cool rally to 30K or whatever for Bitcoin and in stocks. That would be fine. Cool. Okay. Yeah. So anyway, that is all I am seeing here on the DXY. That is all I'm seeing here. All right, if you want to use Market Cipher, you got a nice trigger wave on your weekly. All right, and on your weekly time frame, money is just pouring in. It's just pouring in. You can see like it's the highest it ever was, ever in the history of the DXY. Ever. It's never been higher than this. Okay? So you made a higher high in the weekly on the all-time scale of the DXY. Alright? Where's your money flow right now? In essence, in this wave here, since 2021, you've now made a higher low and your money flow. VWAP is coming up, and this looks bullish. Period. 3 week. 3 week actually, look, you've made lower highs. But that's 01. Yeah, see. I don't know. That's something to note too. Hell. Interesting. Every time frame is going to give you a different story. Let's go to the 3 month. I think the 3 month time frame is a good time frame. 3 month time frame, you look a little bearish. You got a red dot in your 3 month. All right. Now you can easily print a green dot, and things could change. Right? A little head and shoulders pattern. Just pattern. Doesn't mean anything. Alright? But even though you got that red dot, it looks like things went down. So maybe it's played out. Came kind of close to your 13 EMA. Came kind of close to this bottom trend line where you had support, a break deviation of that, and you almost came and tapped it. Almost. But you didn't. You're shifting away from it. Anyway, what's going on with our good friend Bitcoin? You got a lot of long volume, man. This is a lot of longs built up over the past 6 months. So it should be pretty interesting. You know, what do we know? In essence, the pattern that we love is an M formation, a peak formation, a drop, a retrace. This to me is level 2 to me. And it looks like you're coming back up here to test maybe 27, 28K. If you make it up that high. 28K. Down to 7. I could be freaking wrong. You know, I could be freaking wrong. But in essence, you know, if you want to look at Bitcoin, you know, 2000, let's go to a better chart. Let's log it. All right, how long do these things last after a peak? You know this is the freaking peak of the bull market, right? That's your freaking peak. And to your next peak is or actually, let's just go till when you started like going up nonstop. All right. There you go, 149 months in there. All right. Here, nonstop up. Right. Well, let's go. So, well, when did the nonstop down go? Nonstop down actually here. You start here. The nonstop down basically ended somewhere in there. Right? Bang. 139 months. All right. And then the nonstop down ended. Look, only 16 months. And then the nonstop down didn't actually end for a while because of this, right? 761 days? Oh, no. Okay, so, right. 400 days, 700 days, 761 days. Seems to be getting a little bit longer, but if you don't want to count this little part here, right, you got to at least count that because that's a black swan event, and you started going up from there. So about 700 days. All right, so these are kind of comparable. How long has it actually been? Right? Because in essence, all right, from the peak, right, to when you started going back up again, right, because this is a rally, right, and then you were coming down. So just go from like, your 13 EMA on your monthly that you normally would have held as support, all right, 730 days ish, 700 days, right, something like that. Doesn't have to be perfect, does it? You guys aren't going to judge me. All right. 639 days. All right. I don't think this one really counts. This is just one huge wave. It was like straight up. You had the easiest bear market of all time. All right, so how long has it been since now? Because if you got 639 and 700, how many days has it been before you go back up? Day range. Now it depends on the top too, because this is 671. There's 700. All right, 700 from that peak. However, you got a double top, depending on what you think is the top. Oops, that's price range. I'm going from this peak, 700 days, would put you more towards the end of the year. All right, so depending on what top you want, all right, which can make the double top thing really, really sketched out. Because very easily, this could be the deal, is that if this is the true top, which, whatever you think, right, all you're going to do is have your little M formation, which we love. I'll retrace back down. I'll retrace back into it. True bottom. Down here somewhere. Whatever. That could be it right there. Could be this, could be this, could be this. Who knows? But I don't think that this is the bottom, personally. And then you can kind of make your way back up. All right? However that looks. Right? Whether it looks like this, back up to freaking 40, back down, you make a higher low, and then, you're heading up. Whatever it looks like. Whatever it looks like in the future. All right? An hour-long video. If you watch the whole thing, I appreciate it. All right, let me know what you think in a comment. Be blessed, be safe, and stay well.